Investing in these overstressed agricultural commodity markets that we have at this moment are bad investments, both morally and financially. Well, the food prices in recent years have been rising at unprecedented levels. In real terms, they have been very constant ever since 1990 until about 2003. But then something strange starts to happen. They start to rise, reaching a maximum in 2008 and then going down very fast. That was the moment of the financial crisis. However, from 2009 onwards, it starts to rise again. And at the moment, food prices in general are even higher than they were in 2008. We all are affected by rising food prices. But the poorest people, especially in the developing countries, they are impacted the most severe. Of their already scarce income, up to 60 to 80% is paid to food expenditures. If you compare that to the European Union, where it's about 10 to 15%, you understand that if price of food goes up, they suffer much more. So what we see that now that the prices are rising, the number of hungry people in the world is on the rise again. Well, in recent years, many things have changed in the demand and supply of food. Of course, to start with the growth of China and India and therefore an increase in demand for food. At the same time, there have been many extreme weather events like drought and floods. However, it only explains part of the story. Since 2005, there has been an explosion of financial capital going into commodity markets. We've seen large and rapid fluctuations without any relation to underlying supply and demand. Around 2008 it goes down, and at this moment it is more than 4 times as much as it was in 2003. So what we see is that the food price and the number of contracts on the commodity derivative exchanges, that they move very similar in a very similar level.
So if a country, for instance, has a big drought, like in the Horn of Africa, and they have to import food and the prices are very high, just because of speculation, they have to pay for it, they can't, and that means their people go hungry.
Food derivative exchanges have been around for a very long time because farmers have always wanted to reduce their risk to, for instance, a bad harvest or prices going down. And in these markets, some financial speculation is welcome as it provides liquidity. But they've always been only a small part of the market, around 10–20% of the market. However, at this moment, they are often the dominant party, owning up to 70% of the market. They were not interested in actually owning those commodities. What they did was they mostly bought futures. A future essentially is 2 parties agreeing to exchange a certain commodity for a certain price on a future date. And then if the price goes up of that commodity, the value of your future also goes up.
The reason why it is important to do something is that for the moment there are no special laws regarding food speculation, certainly not in the European Union. In the US they've tried to strengthen the rules, but they are afraid that the EU rules are too weak. So there's a huge importance to make sure that the EU rules are as strong as in the US, if not stronger, so that anything is being done to avoid food speculation happening through financial markets.
What we see is that at the moment still every month billions of euros and dollars are still pouring into these markets. Given that it can have such immense negative consequences, especially for the most vulnerable people in the world, we advise that government should act at this moment.
A first thing that needs to be done, and is really a minimum, is to ensure that it is clear who is doing what on these derivative markets and who are the speculators and who are kind of the ones who really can use and should use those commodity derivative instruments. And secondly, of course, we need to limit how many speculators get into that market. The right to food, and that means there's also fair food prices, is something that should have priority over the interests of the speculators.